Welcome back. You are with us on Trading Hour, and it is a big earnings day once again. Lots of major stocks are going to be reporting over the next couple of hours. We're talking about Asian Paints, Bajaj Auto, Tata Motors, L&T, Jubilant Food Works. These are just a couple of them, the big ones. They'll all be reporting numbers. We have our team standing by, Mangalam, Sonia and Vivek, to tell us about the top takeaways that we need to watch out for when all of these biggies report numbers. So let's hit it off with Mangalam. Mangalam, you go first. Asian Paints, I think closer to around 230. So what should we watch for?
Well, a couple of things in Asian Paints. The stock is not particularly cheap, never been cheap, trading at 66 times. So an outperformance is something that will make the elephant dance. What is the street anticipating this time around? 10 to 12% domestic volume growth. And this time, volume growth will be a lot more than value growth, because from last time to this time, we've seen a decline in raw material prices. So the company will pass that on to consumers. Gross margins likely to expand by 400 basis points. EBITDA margins seen around 21%. The same time last year, the number was 18%. And above everything else, management commentary on demand as well as competition will be key to watch.
Okay, thank you very much for that. Moving on to the auto space. Two big numbers today, Bajaj Auto and Tata Motors. Sonia?
Well, Tata Motors is at a fresh 52-week high. It's been the biggest gainer in the auto space this year. It's up 65%, so keep an eye out on that. Very strong numbers expected from Jaguar Land Rover. This time around, JLR has reported a volume growth in excess of 25%, and even the margins are expected to improve quite a bit. So those are a couple of things to watch. But like I said, it's been one of the big gainers, so the positioning is definitely not light on Tata Motors. The other stock to watch is Bajaj Auto. Very good set of numbers. Strong revenue growth of 32% is what we're looking at 10,589 crores. This is expected to be the fourth consecutive quarter of a margin improvement for Bajaj Auto. And on the export front as well, there is a sequential improvement that we're looking at. So all in all, good set of numbers expected from both these companies. But then, yes, the stocks have rallied quite a bit.
Okay, got that. We'll watch out for those two big names from the auto space. Thanks for that, Sonia. Vivek, now what about L&T? You know what, actually I remember how disappointed the L&T stock was last quarter. I think it was a margin issue. It was so apparent that I still remember it. Now you tell us, what is the watch point this time?
Well, you hit the nail on the head. The core margin miss, slight miss of just around 50 basis points actually led to a significant sell-off as far as L&T was concerned at the end of FY23. So this time around, once again, all eyes will be on the margin performance. Most of the analysts at this point of time are actually penciling in softer raw material prices. But despite that, just a 30 basis points margin jump as far as the consolidated numbers are concerned. Very importantly, what Macquarie says is that they're expecting margin improvement to be back-ended. So second half is when they're actually expecting the margins to actually jump up. The second most important point is going to be the buyback. Now, the company has said that they would be deciding upon a buyback. So the size of the buyback, the price at which the buyback is done. Remember, the buyback will help the company go ahead and achieve its 18% ROE target that is part of Project Laksha by FY26. So that's going to be another key thing to watch out for. And lastly, the order inflow trends as well as the commentary in terms of where exactly are they getting orders from, especially the GCC business, Gulf, what is the kind of order wins that they're getting in there. Total order inflow of around 43,000 crore is what is estimated by Macquarie this time around.
Okay, thank you very much for that. Buyback, margins and order inflows. And let's wrap it up with Jubilant Food Works. Mangalam, what are we watching?
Not a lot of pizzas sold this time around. 4.5% is the revenue growth that the street is working with. The EBITDA for them declines by about 9.5%, and you're looking at a net profit correction of nearly 33%. The reason why? Because, the pizza category as a whole has been underperforming the burger category over the last couple of quarters. Domino's like-for-like sales is likely to decline by about 2 to 3%. We are likely to see about 40 to 50 stores being added this quarter, and that explains the 5.5% revenue growth. Here as well, management commentary on Domino's, but more importantly, what they do with Popeyes is something I'll be watching out for.
Okay, so pizza is not selling. I know, I had my share this quarter, but I guess
you probably have more burgers.
All right, thank you folks very much for joining in. And with that, we're completely out of time on this edition of Trading Hour. So many thanks for watching. Do stay tuned because we have halftime report coming up next with all the action.